Welcome to Tabs 2 Cents, the show where we discuss multiple income streams and macro factors affecting the world today.
Hey everyone, welcome to the Tabs 2 Cent podcast. Today on the show we have Luke Broyles, and we're going to be talking about Bitcoin. Welcome to the show, Luke.
Thank you very much. I'm happy to be here. Appreciate the invite. Always great to meet new people, and hopefully this is of interest and use to everyone listening.
Yeah, absolutely. My podcast is, financially oriented, and generally I like to look at stocks and energy, especially. But Bitcoin is always sort of in my peripheral vision, and it's one of those things that I don't want to lose sight on. So why don't we just start with a little introduction, then I'll get into a good question I've got spooled up here for you.
Sure. Yeah. So my introduction. I guess I'll cater my introduction a little different since Ryan seems to be from a different background, perhaps than some other of my shows. But I've been interested in finance for probably about 6 years now. I first started with personal budgeting and obviously, financial independence. So I was much younger then. I was, let's see, I would have been 17 then. So pretty young. Um, I was definitely the weird one for being into long-term thinking, talking about Roths and retirements and all those kinds of things. So most people my age did not care. And so I started with that. I did the whole, Dave Ramsey course, methodology, whatever. Probably you and many people listening know about that. I did that pretty soon into that, just engulfing everything I could when it came to personal finance knowledge, investment knowledge, financial independence, that whole kind of thing. And so I was pretty heavily into stocks, mutual funds, my retirement funds, and some other brokerage accounts. And so I was pretty good into stocks, and I did all right. I outperformed the market, I guess, by technicality. But obviously, we're not talking about any. We're talking about 18-year-olds money here. So, I just had funds that I'd buy and hold for the long term. I thought, okay, this is what I'll do forever. And then the more I got thinking about it, the more I realized, wait a second, the thing better than stocks is real estate, or at least in many aspects it is, because with real estate, you can borrow money that the government is printing more of. Why spend my money to buy stocks one for one when one could borrow money to buy real estate 4 to 1, set 25% down or whatever. So I was like, oh, okay, real estate's very interesting. So 2019, 2020, I got into real estate. Variety of successes and failures there. I'm still into real estate. I'm looking to expand that more. But soon after that, in late 2020, but especially early 2021, I caught the Bitcoin bug, as a lot of people would call it. I first heard of Bitcoin 2017. I thought, okay, this is worst case a scam, Ponzi, and best case is a speculation. And I don't want to mess with the speculations. I don't want to trade watches or Pokemon cards or baseball cards or any of these crypto tokens or Bitcoin. I don't want to deal with that. I want secure long-term things. So my plan is mutual funds and real estate. But I fell down the Bitcoin rabbit hole, and here I am. I have a high percentage allocation to Bitcoin, and I believe very strongly in it. And it's strange because I've kind of come full circle, where most people think that I've gone way out in the risk curve, but frankly, I feel like I've gone way safer on the risk curve. I sleep better now owning Bitcoin than I did with my stocks. I have, if you were to talk to me 5 years ago, me as the little mutual fund and real estate guy, I probably would not have believed you, hearing that I'd be all in, quote unquote, Bitcoin. So that's kind of my full circle there. Obviously, there's a lot more events along the way, but that's kind of where I am today. And so earlier this year, in January of this year, 2023, my Twitter, X, whatever you want to call it was Twitter at the time. My profile kind of blew up, much to my surprise. I did not expect it. For about a year, I had been doing Bitcoin presentations, podcasts, perfecting my presentation and my viewpoints or whatever, and nobody cared. Everyone thought it was crazy. No one was interested. It was too technical. Blah blah blah. But Twitter, it blew up pretty much instantly, and so I've been riding that wave ever since then. It's an honor to meet lots of people, travel to lots of places. I've gone to half a dozen states now, talking about Bitcoin conferences, events, or meetups. I just got back from Colorado. Next week I'm going to LA. I'm going to LA, then Arizona, I think. Hopefully I'll visit El Salvador for the first time later this year, which for those that don't know, El Salvador is a big Bitcoin hub. So anyway, it's been a blast. I really enjoyed it. There are downsides too, but I can't complain. Really grateful. And yeah, so that's how I've gotten here. And then you reached out and said, "Hey, you want to record something?" And I was like, "Of course, sure." So that's how we've gotten to this moment, I suppose.
Yeah, it's very interesting that your journey started much like mine.
Mm-hmm.
I began my finance journey with personal finance, and of course, real estate's always been interesting, but I'm in Canada, and it's maybe
That changes things.
yeah, it's maybe a little bit higher on the risk curve, as you say, in Canada, I think, in my opinion, to get into real estate at this time. So um I'm still in the stock world, though. I'm in energy and commodities is kind of where I moved into. And I guess my question for you is, why did you stop at Bitcoin? Why is Bitcoin the thing for you?
Well, it was never intentional to stop at Bitcoin. It's it's funny how my mindset's changed, but I guess the reason I'd say that is that the Bitcoin thesis, or at least the argument for Bitcoin, which may be wrong, but the argument for Bitcoin is that it's this quote unquote final trade. More often, the maxi laser eye people call it the monetary singularity, where basically it's like this end state, essentially. Basically, everything else is a trade to acquire more Bitcoin. And so, if you subscribe to that worldview, then you come to the logical conclusion that if that's true, then the best thing to possibly do is to make that trade before others do. And so there's definitely a wide variety of ways that one could trade other assets to outperform Bitcoin. But basically, I guess the best metaphor would be viewing Bitcoin as the S&P 500. So instead of trying to outperform the quote unquote market being the S&P 500 with one's investments, basically Bitcoin and the Bitcoiners worldview, that's their philosophy, which sounds absurd to a lot of people when I explain it that way, but really the methodology is not that different. So I guess another way to put it is that the S&P 500 is considered as safe and stable and reliable and predictable as it is because buying a portion or buying some of the S&P 500 is basically a statement saying, I am bullish on America's corporate sector, and I think in the long term, America's corporate sector will be more valuable in terms of everything else, both on a risk-adjusted basis, but also it's just that's par. That's the benchmark to meet, and so Bitcoin, again, the Bitcoin thesis, which we can get into more later, I suppose, but the argument for Bitcoin would be that in the same way that buying the S&P is being bullish, the general basket, that the entirety of the American corporate sector, or at least the 500 largest corporate entities here in the United States, or at least publicly traded ones, Bitcoin is basically going long or being bullish on all innovation and technology or whatever. Basically, the idea being that money flows from weak assets to the strong assets. You sell your Pokemon cards and you sell your US dollars, your political money, for the S&P 500 because you view that as the harder, more fixed, scarcer, whatever asset. So it's not only more profitable than owning your Pokemon cards and your dollars over the long term, but it's also safer in that aspect because you're diversifying, let's say, so much of your risk. And again, that's kind of the leap to the Bitcoin worldview. So to your question of why is that the last stop, I'd say in the same way that the S&P 500 is typically the last stop for people, as they go from meme stock trading to trying to time with mutual funds and individual stocks. They just end in the worldview that, forget day trading, forget timing the market, just DCA in the S&P 500, hold for the long term, and you'll be fine. It's kind of a comparable methodology for these Bitcoiners, is that don't trade in all these other assets or commodities. Just buy the hardest asset, buy the most scarce asset. DCA, hold it, don't trade it. That's my personal worldview. I never advocate for trading Bitcoin. I never advocate for using leverage on Bitcoin, especially leverage with margin calls or whatever. But yeah, so that's for me and a lot of the Bitcoiners. That's why Bitcoin is kind of like the last stop. It's basically, we're like, hey, this is the S&P on the human race, basically. And instead of the 500 largest companies in America, you're going long 8 billion people, past, present, and future, and all the innovations theoretically that they're going to innovate. Might take a long time, but that's the theory, at least. So we'll see if it's true.
That's very interesting. And I do agree that the more I look at financial markets and different strategies to make money in those markets, the index approach does become more appealing. And it's kind of like, some people need to learn the hard way, and I'm one of those people. And sometimes I think about, if I would have just bought the S&P 500 from the start, where would I be today? But of course, there are lessons along the way that you learn, and it is always a struggle between indexing and, individual names. So I completely understand that mentality if you view Bitcoin as the kind of benchmark. But I did want to ask, and this is, you're obviously somebody who's very well versed in Bitcoin, and I'm not. So it gives me an opportunity to ask questions that maybe, a general investor would ask. And one thing I would like to ask is, when you own Bitcoin, when you're buying Bitcoin, the end goal for the asset, is it to be used in trade, or is it just to be sold for fiat currency? Because sometimes I wonder, are you gaining the Bitcoin just to sell for more fiat to buy assets? Or do you think that in our lifetime, we're going to see a world where Bitcoin is the currency or the exchange and trade that we need to buy and sell things?
Yeah, that's a good question. Well, I reverse the question and ask about. I talk a lot about Argentina. I have a few online friends from Argentina, and I'm hopefully going to be going down there some point in the next few years. I don't know, maybe not. But anyway, I think Argentina is a good example that right now, if we were not having this conversation in the U.S. and Canada, but we were in Argentina and we were using Argentinian pesos, and we had this, U.S. dollar. I mean, if you were to ask me that question there, and instead we were talking about the peso, I mean, I'd say, like, I'm earning as many pesos as I can because that's the currency we have right now, but I'm saving in dollars because I think dollars are the harder money. I think they're the harder asset. I think they're the harder form of energy. You said you're an energy. It's like, that's what it is. Peso is backed by the political might, let's say, of Argentina, and the dollar is backed by the political might of the U.S. The U.S. has a bigger economy, bigger population, and if they ever want oil, resources, or cheaper labor, they have a big military to enforce that. They have the military to enforce their taxes. For a wide variety of reasons, the dollar is stronger. It has much more fundamental energy backing it, and it's much more stable than the peso. So I would never trade my pesos for dollars back and forth and try to arbitrage the two, so that I can have some pesos, put it into dollars when the peso goes down, but sell it back into pesos, double my pesos. I'd never do that because the long-term thesis for the pesos never changed. The trajectory in terms of the dollars never changed. And so for me, I never do that, because at that point, I'm no longer projecting something, or I'm no longer trying to time something that's reasonable. I'm trying to time something that's 100% based on human emotion. So because I'm basically just trying to predict what's the U.S. government going to do, aka the people in the U.S. government and the American voter base, and what is the Argentinian government going to do. And neither of those things are rational. The Argentinian government probably less rational and more debasing their currency faster. But I'd say it's the same thing with Bitcoin. That you asked the question: do you exchange Bitcoin for goods and services, or do you sell more later for fiat currency? I'd say the vast majority of Bitcoiners do the latter, where they want to buy Bitcoin at let's see, what's Bitcoin right now? 27,000. They want to buy it for 27,000 and sell it for 270,000. Let's say, they want to put in $1,000 to Bitcoin and cash out later for 10 grand, and that way they can buy a car, down payment on their house, whatever. And I understand why people think that. I think that's the unfortunate reality that between inflation and economic troubles, most people have a super short-term mindset where that's their highest priority because that's where their biggest pain point is right now in the short term. But I'd say that the majority of hardcore, crazy Bitcoiners like myself are the polar opposite. We're much more on the former, that we don't want to sell for fiat exchange rates. We'd rather just sell for goods and services or whatever. And actually, probably a better word for that, spend. Like for me personally, I never want to sell my Bitcoin. I never want to exchange it for any form of political currency. And if there was one form of political currency I would ever consider exchanging it for, it'd be the US dollar. But even then, it's not compelling to me at all. So for me, I'll probably just hold it. And then if I ever want to buy something or spend it on something, I'll just do that. And that probably takes a long time in some ways. But on the other hand, I don't think it may necessarily take as long as we assume is the case. So in the same way, I'm talking a lot in monetary terms, but to give a slightly different yet applicable metaphor of like the internet, if I'm a newspaper company in the late 90s or early 2000s, and I realize, this internet thing's kind of a big deal, we should take our budget, which is 100% going to printed newspapers, and we should move 5% of that to these weird nerd bloggers in the corner over here. Just give them some play money, see what they can do. Kind of an experiment. I mean, once that energy flows in that direction, away from the newspaper and towards the internet, I mean, that kind of never goes back. In 1998, you move 5% over. In 2002, you move 10% over. A few years later, you move more over, and now basically every media company is 80-90% an online company, and then the rest is just this like vestigial organ of analog media. So I'd say in the same way, whether we're looking at it from the monetary lens, like dollars versus pesos, or the technological lens, like newspapers and internet, or horse and locomotive, whatever, I'd say it's the same direction. That for me, I view Bitcoin as the money, and so when I'm selling my dollars for Bitcoin, to me, I'm taking profits. To me, I'm taking profits when I buy Bitcoin, not selling Bitcoin. And I think most people view taking profits on Bitcoin when it goes up in fiat terms. When for me, like fiat's thing is going down. I want my profits now before it goes down further in terms of Bitcoin. So I think most people, in short, to answer your question, I think most people would sell it higher for fiat. I do think that, but I think the hardcore people are never selling for fiat, and I'm one of them, where I'm not compelled. Even you'd have to give me a pretty strong argument.
Yeah, I think that makes sense to me in terms of long-term strategy for Bitcoin. Like if you're buying this asset to hold it for the future, which you think it will be a very desirable thing for people to have, there's really no reason to sell for profit for fiat currency that, as you say, is inflating away every day. So, I mean, that makes sense to me. And I guess when it comes to cryptocurrencies in general, I know that there's a little bit of a conversation between Bitcoiners and, Ethereum and all those things. Do you think that the FTX collapse and the crypto-backed FTX token, the way that it crashed, do you think that Bitcoin has sort of established itself as the cryptocurrency, or do you think that, as you say, you throw 5% to the bloggers? There's a bunch of different sites in the early stages. So how do we know, or how do Bitcoiners feel about only choosing one cryptocurrency at this stage?
Yeah, well, I definitely well, it's a good question. I would not say Bitcoin has established itself. I would not say it has to do with establishment. I think that the stability of a form of energy, or the stability of a currency, has nothing to do with what do people think about it. I think it has nothing to do with the establishment. The reason FTT token, the reason it failed is not because it didn't have enough quote unquote establishment or reputation. The reason it failed was that it was inherently unsustainable. And so I'd say the same thing with many, the vast majority of digital tokens. I mean, we could debate that about Binance token. We could debate that. Well, we don't have to debate that about Luna. We don't have to debate that about a wide variety of other things that have imploded or collapsed. I think there's so many examples. I made my point, but I'd say the reason Bitcoin has quote unquote established itself is because people are realizing that its structure is different. Its survival and its dependence is not reliant on some organization to keep it afloat. FTX token was reliant on the FTX institution. Binance token is reliant on the Binance institution. BitConnect was reliant on its institution. Luna was reliant on the Terra Luna Foundation or whatever. Again, Argentina and the wide variety of other countries that have had inflation in the past or present, all that is the result of humans having control of the number of units within that system, leveraging out against itself within, becoming insolvent and then blowing up. And so I think the reason Bitcoin's established itself is because people have seen that, oh, okay, this thing has survived for 15 years. There has been no successful attempt, even remotely successful attempt, despite numerous attempts, of someone being able to do that or leverage it or destroy it. So yeah, I understand why people would want to diversify into different crypto projects or into different tokens, but to use a metaphor we've already used, at the sake of being redundant, is the internet. In the 80s and 90s, there were multiple internets. TCP/IP was a protocol that won out, but there were other internets, the vast majority of which were centralized. And the one internet that was decentralized, the one internet that allowed the freedom of information without human oversight or control manipulating that information, was the internet that won. And so, like we're talking on the same internet right now. Everyone listening is listening on the same internet right now. None of us had to debate or talk with each other about, okay, we want to record this podcast. What internet protocol should we listen to this on? It's just that this became what everyone uses because it was the one with the most Lindy effect. I'm assuming you know Lindy effect. This is the one with the highest Metcalfe's law. This is the one with the most reputation. First and foremost, because it's the most secure, it's the most decentralized, and it's the most outside human influence. And so, all that to say is, I'd say the same with Bitcoin. That right now, it's early enough to Bitcoin that we're in like those early internet stages where people are still debating which internet should we use. What is this internet? What is this blockchain thing? And which one? And people are right when they say, "Oh, crypto's all scam." They're like 99.3% correct. The vast majority of these cryptos are scams because they're just made up numbers created by people. In the same way that the vast majority of internets were worthless, the vast majority of these tokens are worthless. And so for me, I have that conviction that Bitcoin's unique. That's partially from the Lindy effect. That's mostly just from learning a lot about the behind the scenes of how it works and how everything else works. That's something that really can only be brought to someone's conclusion by work, effort, and conviction. But that's how I feel. I guess my encouragement for people, and obviously everyone has to make their own choice, but for me, my encouragement online has always been people just get a little bit just to experiment with it, learn about it. I do not think it's smart for people to go all in Bitcoin. Most people should not have the allocation of Bitcoin I have, which makes sense because most people have not put in the number of hours and effort into this that I have. And so no one should buy more Bitcoin than they have the confidence or conviction in doing so. But I do think that most people should consider buying at least, a small, reasonable percentage. Again, like the little weird internet bloggers, it's like, hey, if you think there's a 1% chance that these Bitcoin crazy people are right, maybe that's worthy of a 1% or 2% allocation. And so, anyway, yeah, I don't diversify into any other digital assets or tokens because ultimately this isn't a corporate race of which company is going to outperform and innovate the other. This is ultimately a paradigm race of which paradigm is going to win. So I think this isn't a debate between Amazon and Sears and which one's going to win, or Blockbuster or Netflix and which is going to win. This is a debate of protocols at which those things are built atop of. So hopefully that makes sense and answers your question.
Yeah, for sure. And I think one thing that I find interesting with all of those examples that you listed there with the failed cryptos is that we know who created those cryptocurrencies, and we can track it back to those companies when things go wrong. And with Bitcoin, there's the ghost of Satoshi Nakamoto, and nobody's really sure who that is or where it started. And of course, Bitcoin was created by a person, but to some degree, or maybe a group of people. I wonder, seeing as you're in the inner circle of the Bitcoiners, I wonder what your thought is on that. Where do you think that Bitcoin came from and who's responsible for the technology?
Yeah, I think to go even one further, it's not just that Satoshi was pseudonymous. That's not just the reason. The much more important reason is that even if he wasn't anonymous, or even if he came back or made himself known, which he easily could, I doubt it, but I really doubt it, but he could technically. The more important thing is that it doesn't matter. Even if Satoshi came back, he would have no control over the network. So it's not just about that he's anonymous, so we can't trace it back to any one person. It's that even if we could, it just wouldn't be. It would have no impact, have no change on the network. I have just as much of a say in Bitcoin's network as Michael Saylor does. Obviously, he has more of a reputation than I do and more money than I do, but strictly within Bitcoin's code and algorithm and nature of it, it's irrelevant how much money you have. So, yeah, I have some guesses on who Satoshi could be. I don't usually like to say just because I frankly don't think it matters. And I think that's just a whole can of worms that is more of a side quest obsessive inquiry. But I think it was a person. I think it was a person from Europe. I think it was a guy. I think he was in his 30s. Um, so I have my speculations, and frankly, that doesn't really narrow it down too much because there's really only like a couple dozen people it could possibly have been. The Bitcoin's a small, weird niche community now, but the early 2000s, when it was 10,000 times smaller of a weird niche online group, there's only so many people it could have been. So, but they were pretty much all men in that age range, and I happen to think it's a couple different options. But yeah, at the end of the day, I think it's a single person. I don't think it's an entity. I don't think it was the government. I know people that strongly think it is one of those things. And maybe they're right. That's part of the mystery and that's part of the fun. But yeah, I suspect it was a single person with help from others. Obviously, many people helped him with it, but yeah.
Yeah, that's interesting. It's just something I thought I would throw out there, just when I was reading. And of course, when we talk about money and the stability of money with fiat, they have to initially they had to print more as populations increase and economies grow. And I know that that's been something that people have discussed with Bitcoin. Well, there's only so many, but just in reading up on a couple of things, there's 100 million Satoshis in every Bitcoin. So
Correct.
is there ever been a study or some kind of analysis on how many Satoshis you may need for a global economy? And do you think that there's enough to effectively allow for proper trade within the world if the entire world was to utilize Bitcoin for that?
Yeah, I think that's a good question. I think to properly answer that, I think for me, I would challenge the presupposition that creating more liquidity or creating more currency as populations and economies grow is essential or arguably good. I don't think it is, because I mean, if we think of it, what essentially that means is that it inherently is theft, and it's inherently a centralizing action. If we have an economy a certain size or population a certain size, and it grows, and we tell ourselves, again, not a government conspiratorial thing, but the whole population tells itself, oh, we need more money to stimulate the economy, help with whatever, lubricate the economy. What we're doing is we are printing new money, which is inherently a centralizing action, and it results in greater centralization. Basically, we're taking those productivity gains and we're siphoning them away into new money. And so I wouldn't argue that's a good thing. So what Bitcoin does is that instead of liquidity via new currency units, it just gets continually subdivided into smaller and smaller portions indefinitely. You're taking some energy, buying some Bitcoin, and in the future, that percent of energy you held in the past gets preserved into the future as people chase a smaller and smaller amount of Bitcoin. So yeah, there's 100 million Satoshis per Bitcoin. I'm not aware of a study as the one you described, but the basic theory is that it should just continue down indefinitely with volatility. It'll be volatile to the downside and the upside as it trends down, a perpetually smaller amount of Bitcoins available. I work at the Bitcoin Advisor. The Bitcoin Advisor is a company out of Australia. We help clients, buy, secure, and store their Bitcoin. And my boss there is Peter Dunworth. I recommend him for those wanting more of this kind of train of thought, because his basic thesis and a big part of why he's so passionate about Bitcoin and a big part of why he started his company is this idea of the daily issuance of Bitcoin compared to the total volume of daily global trade. And so, you could do that math out. Trillions of dollars global trade, 900 Bitcoin issued per day today. In about 8 months, in early 2024, that'll be 450 Bitcoin a day. So, you could do the math that way, and it's an absurd number. But yeah, the basic idea is that it's a perpetually smaller number. It never arrives at X number of Satoshis that are required for global trade. It's just a perpetually smaller number. Right now, it's a bigger number. In 5 years, it would theoretically be a significantly smaller number. And then theoretically and definitely we just keep getting into a smaller and smaller number. And then when we hit the limit of Satoshis, then we subdivide the Satoshis. We have higher layers, or this would be many years out, probably at least a century out. Theoretically, it'd be a very long time, but eventually at some point people would probably do that if this idea is correct.
That's interesting. So there is a way in which they can divide Satoshis if they need
Oh
to.
yeah, definitely. Yeah, people already do. It's just totally a nerd geek Bitcoin thing. There's no point. How many? I think it's like 3,500 Satoshis per dollar right now. So like 1/100th of a Satoshi would be like 1/30,000th of a dollar. So it's just absurdly. There's no practical application today. They just do it for fun, just because they can. But yeah, you could easily do that on a layer 2 or layer 3, whatever. You could subdivide that, and if things escalate to where it's needed, then eventually the network could just update to subdividing the satoshis or whatever. But yeah, for many decades it's covered on upper layers. Obviously, there's a lot more nuance there that I'm not knowledgeable on and skipping over, but yeah, there are people that do that today just for fun.
Yeah, it's very interesting because this is something that could only work with a crypto coin or a internet money or however you want to say it. Because if you had sound money in a physical form, let's say they're gold coins, you can only break it down to so many small pieces, right? You can't have a pin size piece of gold and say go try to buy something with it. It's too small to
Yep.
keep
Yep.
track of. But if you have a crypto coin that you can break down infinitely, then you're good. You just have it in your wallet and it just says how much it is. So it is very interesting that way, I think, because you can keep the money sound and still break it down into small enough increments to be useful. And I wanted to just bring up that the first time I heard you speak to Bitcoin was on the We Study Billionaires podcast.
Oh, pressed it. Yeah. Yeah.
And that was the BTC episode 117. And you mentioned in there that you thought we are kind of rolling into the start of the information era. And for me, what I've noticed with my own personality and a characteristic that I have is that I tend to be able to see the big picture, but maybe I don't necessarily take into account how long those things will take to play out. So, possibly I'm right about something, but if I was invest into it today, it would be the wrong time. So
Mm-hmm.
I do I do feel like I see the picture for Bitcoin. I'm just a little bit skeptical about how long it's going to take to play out. I wonder if you could just maybe elaborate a little bit on your thoughts of the information era and where we are today
Yeah.
and kind of where we're headed.
Yeah, no, that's great. I can tell just from talking to you and looking at your profile, you're a long-term thinker. So, that's that's really good. We need more of that, but especially in the investing world, it's amazing how we don't have that. But yeah, my larger point there about the information era is that I'd argue we're still very early to the internet, which people seem to view as this revolutionary idea, which really um, I, I guess I say it more and more now because I guess I'm surprised again how we forget that. But the internet's only a couple decades into this kind of mass adoption thing. I mean, shoot, the smartphone sitting next to me, the iPhone here, what was that, 2009, 2007 or something? So we're like barely looking at 15 years for the iPhone. I mean, it's just these things are brand new, which is part of my concern. As a side note, one of my concerns is that technology is moving so fast right now, and it's probably only going to move faster in the future. That there's many trade-offs we're not properly considering, especially when it comes to mental health and everything. But that's a discussion for another time. My larger point with the information era being that at least a third of the people on the world haven't used the internet. The internet adoption is only at 62% or so, low 60 percentages. And I'd argue that a lot of the people within that 60%, people that do have internet access, don't use it very much. Really, there's a very small portion of the world that use the internet daily and use the internet for 5, 8, 10 hours a day. I mean, like, I think us people that use the internet all the time, like you and me probably, and probably most people listening to this, tend to forget that because we have this bias, because literally everyone that we interact with on the internet also uses the internet all the time. And so because we're in the internet world all the time and we're exposed to that all the time and everyone else in that world is exposed to it all the time, we kind of forget that the rest of the world also exists. So if we were to go back 200 years and you were to tell me that the locomotive, that only 60% of people have ever seen a locomotive, and a significant percentage of that 60% have ever ridden on a locomotive, an even smaller percent of those people use the locomotive daily, and And I were to tell you that, oh, it's late to the industrial age, I mean, that's kind of a bad take in my opinion. I think on the global scale, again, if we zoom out to the global scale, not just in our little bubble, but if we zoom out to our global scale, widen our horizon, and we extend our time horizon, I think objectively the mid 1800s was relatively early in the industrial age progress. The same thing I think could be said about computers. If we were to go back to the 80s, when the computer was at 50, 60, 65% adoption, or whatever year it is, if we were to go back then, I think it would also be a bad take to say, oh, it's no longer early to the computer age. Every household has one computer now, everyone has dial-up, it's no longer early. This whole internet mania, which is a whole another separate adoption curve, was the peak of the computer, whatever. I mean, here we are today. Most people have a computer on their wrist, a computer in their pocket, a computer in their handbag. Their car is a computer. I mean, like, everything they have is a computer. So my larger point, the internet, being that I think objectively, if we are zooming out beyond our short time horizon and zooming out to the whole world, I think people in 30 or 40 years will probably look back at today, the early 2020s, as being the quote unquote, early internet days, which for them is true. For us, it doesn't feel that way, because we can look back 20 years and say, wow, that was early. But I think people in the future will look back and say this was early for us. And so that's one point to make there. I think the point there, bringing it back to Bitcoin, I think the point there is that I think a lot of Bitcoiners are naive and thinking how quick Bitcoin adoption is going to happen. There are people out there legitimately think that by the end of the decade, by 2030, we're going to have Bitcoin mass adoption, hyper Bitcoin. It's like, no, the dollar's not going anywhere for a long period of time. People are very stubborn. They take a long time to change, which there's pros and cons to that. Bitcoin's very young. It's not ready. Layer twos are not ready for that kind of mass adoption, which Bitcoiners don't like to hear, but it's not. In the same way that the internet, at the foundational level, was just fine in the early days. The websites, and it wasn't ready for mass adoption, the same way Bitcoin's not ready for mass adoption. However, with that said, I do not think Bitcoin needs anywhere close to 100% adoption for us to see massive societal change. Again, internet's at 60% adoption, and the world for us feels entirely different than it did 10 years ago, let alone 20 years ago. I think it's entirely possible that Bitcoin's only at 8%, 10%, 15% adoption in a decade or so, and we still see massive global change. Like, if the Bitcoin thesis is correct, and we see a complete collapse in political currency and a complete collapse in the banking sector and all these things, like, that's not going to happen at 100% Bitcoin adoption. And I really doubt it's going to happen at 50%. It's probably going to happen more like at the 20, 30% range. I mean, it's like, again, we're at 60% internet adoption. Sears has been gone for years. Kmart is gone. Kodak is gone. All the former behemoths are already long dead and gone, many of which for more than a decade. So I'd argue the same thing, that that dynamic, which gets to a similar conclusion, but I think it's really important to distinct that we are nowhere close to 5% Bitcoin adoption. We're nowhere close to 10% Bitcoin adoption. It's years away, but just because that's years away, that doesn't mean that change won't happen really quickly. In fact, I do think it'll happen quickly. And I don't want to get too absurd here, or it sounds absurd, so I'll just say it, but I think Bitcoin could easily be tens of millions of US dollars a coin, and the vast majority of people still don't own Bitcoin, just because that's how the math works. If you believe the thesis that Bitcoin reprices other currencies, I mean, Bitcoin easily could be millions or tens of millions of dollars, and mass adoption is still like years, if not a decade plus away, which sounds too good to be true. And I wouldn't have believed it if I was telling myself this 3 years ago. But again, if we think of the internet, or we think of the locomotive, either it's right or it's wrong. Either the internet is the internet or it's a fad. Either the train is real and a real innovation or it's not. And if it is, then in all probability, at any point it's really early, and at a rare point it's stupendously early. So I'd argue with Bitcoin's the same case. Either Bitcoin is what we think it is, or it's not, and people can come to their own conclusions about that. But I think people should really strongly consider taking like a 1% allocation or some percent they can live with losing. Set it over to the bloggers, let it sit there on the off chance that we're correct. And I think there's a extremely high probability, extreme high probability that we're correct. But that's the general view, that if it's correct, then it's just early beyond what most people can comprehend, which has the pro being a lot of price appreciation in terms of USD, if that's your way of valuing the world. And then the downside being that it's going to take a long time. Like, this will be many years of volatility. There'll be a lot of price spikes, a lot of price crashes, and if one isn't educated enough on the topic, they should not buy it because they will be washed out in the volatility. So hopefully that answers the question. A lot of different tangents I went on there, but hopefully that's answering your question.
Yeah, I think that you did answer the question in the sense of the timeline is a little bit muddy, let's say.
Yeah.
We know it's going to take a certain amount of time. We're just not sure how long that is. And it's very interesting because I spent a lot of time talking about energy, as I mentioned, and oil is obviously the major commodity of choice in the energy market. And generally the bear case for energy is, EVs and green transition, which is all well and good in this side of the world. As you say, we all have the internet too. But when you look at a country like India, for example, or, even China, they haven't fully developed those countries yet. And there's 1.4 billion people in India that are looking to get mopeds and are looking to get, their own transportation, and that all takes oil. So it's the growth of oil, similar to the growth of the internet, isn't done yet in many people's eyes. And it's just hard to envision the world at that scale, I think, sometimes.
Definitely.
When you see what's going on around you. So I mean, yeah, for sure, I think that it's definitely something's there. I need to do more work on it. I don't know what it is yet, but as you say, I make a similar argument with investing. I'll mention to people, don't bother with the, practice accounts. Just put some of your own money in. And, obviously nothing crazy, just a little bit. So you can feel those dips and you can feel those gains and understand a little bit of trading before you, start putting more money in. And I think Bitcoin maybe is a similar thing where you need to, get a piece of it to understand it a little bit better. So
exactly.
I don't know if you have anything else to add. I was just going to say, I think that this has been great. If you want to add anything else.
Yeah, sure. I mean, like you said, I encourage people, if they want to learn more about it, it's like, just buy $100 worth, do that, learn self-custody, use it. I mean, treat it as your kind of research. It's like, you won't understand what it feels like to use Lightning until you've used Lightning. You won't understand what it feels like, or what, so if you want to learn about it, use it. But my encouragement for people is, don't buy more than you can not sleep at night with. Just get a little bit. Maybe that's just $100. Maybe it's just 1, 3, 5%. Again, people can pick their percentages, but take some nominal amount, just buy it, and don't touch it for 4 years, 8 years, 10 years, whatever it is. Just let it sit. It's not going anywhere anytime soon. And maybe this thesis is right, in which case you'll be glad, and you'll probably be selling significantly higher percentages for Bitcoin soon enough. Or it's wrong, in which case, like, oh, boo-hoo, couple percent, something that's nominal. And I think I think the reason I add that encouragement and urgency is because we have to keep in mind, let's think about this EV example you just brought up here towards the end. It's like that's exactly proves my point. Like EVs are nowhere near mass adoption. They're not ready for mass adoption. And yet, look at Ford, look at all the other automotive companies. It's like their margins don't look nearly as good as Tesla's. And I've mixed feelings about Tesla as a company or an investable. But my point is that even though EVs are nowhere near mass adoption, it's like the same paradigm shift happening again, basically, that even though they're a long way away from mass adoption, the current monopolies are really struggling financially to keep afloat. All of them, besides Ford, I think, multiple times have been bankrupt, or at least once been bankrupt. And so obviously it's a slightly different example. But my point being there is that if that is correct, that at 5% Bitcoin adoption, 10% Bitcoin adoption, we see political currencies, nation states, governments, corporations, whatever, all start to cannibalize or implode, it's going to be very hard to buy Bitcoin. I would argue that Bitcoin will reach an infinite fiat exchange rate well before it's mass adopted, and so the encouragement for people to get off zero, buy a little bit of Bitcoin, self-custody it, lock it down. The encouragement there is that right now you're not fighting nation states. And if this thesis is correct, most people will be fighting nation states. Most people will figure it out after nation states have figured it out. And so that's the encouragement for people to get off zeros. Just have fun with it, learn about it, be patient with it. Don't FOMO in and don't panic sell. Just let it ride. Either it's going to zero or it's going to an infinite fiat price. And so everything in between is just noise. So yeah, and right now it's a lot closer to zero than infinity. So for me, I'm buying. So everyone to each their own. But yeah, anyway, I really appreciate the invite. Appreciate being able to talk. Hopefully it's been of interest to people. So thanks.
Yeah, absolutely. This has been great. Just want to say thanks for coming on the show. And if you have any content you'd like to share or any kind of channels for people to find your work, you feel free to plug away.
Yeah, I'm on Twitter or X, and I'm on YouTube. People can find me there. I also work at the Bitcoin Advisor. One thing I probably should say too is that if you are going to buy Bitcoin, be careful where you're buying it and be careful how you're storing it. Bitcoin on exchanges is not real Bitcoin. Make sure you are self-custodying your Bitcoin. What the work I do at the Bitcoin Advisor is explicitly that I give free consultations to people how to buy, store, and secure their Bitcoin for the long term, where they have control and they have access. That's real Bitcoin. And so anyway, it's been a blast to be able to help people. We don't advise people on if they should buy Bitcoin or not. We don't advise people on what percentage they should allocate to Bitcoin. We simply help them avoid the rookie mistakes and avoid those kinds of fears, frankly, that a lot of people have when they first get into this of, am I going to mismanage my keys, or I'm going to do this or that, whatever. We handhold people through that process. So anyway, if they want to hear more of my ramblings, they can find me on Twitter or YouTube. And if they want to talk to me one-on-one, they can go to the Bitcoin Advisor, the bitcoinadvisor.com, and then they'll see my face and they can book a consultation there. So those are the best places to find me. So thanks again.
Awesome. Well, thanks for coming on. Really appreciate it.
Joe is not a financial advisor and may have interest in the stocks discussed on the show, so do not take any information included within this podcast as a recommendation or formal advice. Thank you.